Hello and welcome to Business Incorporated, live to you from Channel's television headquarters in Lagos. I am Bolaji Akinwale. Coming up, Nigeria is again Africa's biggest economy. UK's inflation rises to highest level in almost 2 years. Plus, Namibia's central bank leaves its key rate unchanged. The International Monetary Fund has affirmed Nigeria as the biggest economy in Africa, ahead of South Africa and Egypt. Nigeria was reported to have lost its spot as Africa's biggest economy to South Africa in August 2016, following the recalculation of the country's gross domestic product. Latest estimates from the IMF put Nigeria's GDP at $415.08 billion from $493.8 billion at the end of 2015. The IMF World Economic Outlook for October this year put South Africa's GDP at $280.36 billion from $314.73 billion a year ago. Egypt's 2016 data was reported as not available, but its 2015 size remained at $330.1 billion, while that of Algeria, one of the largest economies on the continent, was put at $168.31 billion. Access Bank Ghana has officially launched an initial public offer for prospective investors to buy shares in the bank and be a part of its growing fortunes. The launch follows approval from the Securities and Exchange Commission and the Ghana Stock Exchange to undertake an initial public offering and subsequently list on the Ghana Stock Exchange. Access Bank hopes to raise a minimum amount of 104 million Ghanaian cedis to support its growth and expansion strategies when the offer opens today to 11th of November of 2016. Prospective investors are required to purchase a minimum of 100 shares at 4 Ghanaian cedis per share. European stocks were mixed in morning trade on Wednesday following a raft of data out of China, which showed government spending that helped the world's second largest economy to stabilize. Janelle Dumalong is DWTV financial correspondent. She joins me from the Frankfurt Stock Exchange. Janelle, welcome to the program. Now, China's economy grew by 6.7% in the third quarter, showing signs of some stability, not just for the country alone, but the global economy. Tell us how the markets reacted to this development.
Hi, yes, good day. Well, basically, the markets were not at all surprised by this. Traders here, for example, on the Frankfurt trading floor have said that it's completely been in line with their expectations. Now, of course, Chinese figures always have to be taken with a little bit of a grain of salt, but beyond that, looking at the bigger picture, they really do see the figure as an indicator that domestic consumption in China is strengthening and that the pivot away from an export-oriented economy is working. And now they're seeing a gradual, if imperfect, stabilization of the world's second largest economy after nearly a year of a slowdown. So in that respect, investor worries about sustained sluggishness are subsiding, and the general consensus is that Chinese authorities could have done a worse job in terms of their handling of the economy. But the other side of that, of course, is that this growth has actually been fueled by a property boom, which in turn has been fueled by debt. So there have been worries about a bubble, and investors are saying that definitely financial regulators have to get a handle on this. This is not the sort of thing that you can just leave the markets to sort out by themselves. And of course, this is China. That's not possible anyway, seeing as the biggest players in terms of lending. So the banks and the companies are state-owned.
A number of earnings have so far been released. The latest include Goldman Sachs, Johnson & Johnson. We have BHP Billiton, Carrefour and Travis Perkins. How do the numbers turn out?
Well, that's a big basket of companies that you've named there, but yes, let's take a look at them, and let's start with Goldman Sachs. So particularly strong trading revenue has helped push up Goldman Sachs' quarterly profit a whopping 47% to $4.88 a share, and that beat expectations, of course, of $3.82 a share by quite a bit. So that puts total revenue at about $8.17 billion, up to 20% from the previous quarter. Now enjoying a similarly good fortune, Johnson & Johnson, which saw third quarter revenues up, which saw a third quarter net income of $4.27 billion, mostly driven by strong prescription drug sales, which we know is its biggest business. And of course, that business was in turn driven by immune disorder drug Remicade, which was its best-selling drug. Now, for its part, BHP Billiton has some good news for us. It has signaled that it thinks that perhaps the commodity slump is on its way out. So the chief executive has, for example, referred to a rebalancing of the markets, although he has said that his company still expects a supply to outpace demand. Both oil and gas markets, for example, will only improve in the next 12 to 18 months. Now, Carrefour has also beat expectations. Sales rose 1.1% to $21.78 billion, mostly driven by strong business in Latin America and continuing improvements in its home market of France, which in turn have helped offset weakening business in Asia. Now, however, amid all those positive results, we do have one loser, and that is Travis Perkins, the UK's, of course, biggest building supplier. It's closing 30 branches and potentially putting up 600 jobs on the chopping block, so bad news for them there. So it's warned of weaker than expected profits for 2016. So the consensus was actually around £415 million, and we'll be seeing figures weaker than that.
Okay, the Fed's Beige Book, housing starts and existing home sales are some key data scheduled for release later in the week. What are the market's expectations from these data?
You are exactly right. In a few hours' time, the Federal Reserve will be releasing the Beige Book after European markets close. So the Beige Book, of course, contains reports on the current economic conditions in the U.S., and it's released around 2 weeks ahead of every Federal Reserve meeting, and we know, of course, that the next one is going to be in November. So this Beige Book is going to be one of those things that the investors will be scrutinizing as they look for clues in terms of the next steps in terms of interest rate policy. So they're not expecting, the markets aren't expecting any surprises. Everyone is still expecting a gradual tightening of monetary policy in the U.S. and no sudden changes. But still, the Beige Book will be is definitely on their tables to read, and they'll be looking at that as well as any sort of indications as to the next steps of economic policy when we have the presidential debate tonight. That, of course, is the last one before the U.S. elections. So as you can see, maybe you can see behind me on the curve, but investors are definitely in wait-and-see mode. They're looking in a lot of directions, and they are looking at a lot of factors in which to make their trading decisions.
Janelle Jumalong is DWTV financial correspondent reporting from the Frankfurt Stock Exchange. Thank you so much.